Well, good morning. Yes, it's me, Kenny Polcari, your host of the party, and today is Friday, November 21st, 2025, and it's been a bruising week, and there's so much to talk about, but here are the things that you need to know to get your day started. Well, yesterday, it went from risk on in the morning to risk off by the afternoon, and it happened very, very quickly. The focus off of NVIDIA is now once again on the Fed and what we're going to do about rate cuts. Now, the crash in Bitcoin is certainly not helping the mood at all. Bonds are higher yesterday. Oil is lower, down in the 50s now, and gold is lower as well. And what do we have for dinner today? We're going to have the Veal rolatini. It is delicious. Okay, so stocks went from risk on in the morning to celebrate the NVIDIA print that hit the tape on Wednesday night to risk off when it became clear that the latest non-farm payroll report, it was the September report, was 2 months late, revealed that we had added 119,000 jobs versus the expected 53,000 jobs and well above the August rate of 22,000. The unemployment rate, which many expected to surge, came in at up 4.4%, just 0.1% higher, and still considered full employment. And that caused some investors and every trader, all the algos, and all the Momo guys to reconsider what that means for the Fed's next move. And guess what? It wasn't pretty. All that talk of having to cut rates to save the labor market appears to be off balance. The labor market does not appear to be in distress. Thus, the rally in stocks on the assumption that the Fed was just going to continue to slash rates now and in the future is no longer the assumption. Capiche? Now, stocks did a complete reversal, a 180, going from all green to all red in what was the biggest intraday reversal that we have seen in a long time. Here's what happened. From the intraday high to the intraday low, what was an emotional, algo-driven, Momo-amplified, shoot first, ask questions later reaction. The Dow swung 1,100 points. The S&P swung 236 points. The NASDAQ also swung 1,100 points. The Russell swung 100 points from high to low. The Trend swung 475 points. The equal-weighted S&P swung 187 points. That was a big move. And the Mag 7 swung 1,675 points. The closing bell told us how this chapter ended. And this is what the scoreboard looked like at 4 o'clock. The Dow ended up losing 387 points, or 0.8. The S&P gave up 103 points, or 1.6%. The NASDAQ gave back 488 points, or 2.5%. The Russell gave back 42 points, or 1.8%. The Transports gave up 220 points, or 1.4%. The equal-weighted S&P lost 87 points, or 1.2%, while the Mag 7 gave up 541 points, or 1.7%. Now let's look at the trend lines, because these are important, especially for the algos and the Momo guys, right? Because they react to trend line breaches. The Dow, the S&P, and the NASDAQ all sitting right on top of their intermediate-term trend line support. And this is key, because should they fail to hold, then we should expect another wave of selling pressure. The Russell and the Mag 7 have pierced theirs, and they're starting the day below that trend line. The equal-weighted S&P has broken all that and is about to test its long-term trend line at 7,318. This morning, the tone is once again a bit negative. Asian markets closed lower. European markets are trading lower. Spain and Euro stocks both down better than 1%. The others are down about 0.4%. U.S. futures are trying to buck the trend. Dow futures up 165. The S&Ps are flat. The NASDAQ's down 40 while the Russell is flat. But it is Friday after a bruising week. So this could go either way. It's going to depend on the tone of the headlines and a break of the trend lines for the Dow, the S&P, and the NASDAQ, because if they break, that will absolutely put more pressure on stocks. Now, let's be crystal clear. None of the indexes are yet in correction territory, right? Every move you saw yesterday is still within what's considered a normal trading range inside an ongoing bull market. But that doesn't mean that we're not going to get there, right? It just means that we're not there yet. So this is still considered normal, right? What's driving the mood right now isn't disappointment in AI or tech or the NVIDIA story. It's not that at all. The shift to negativity is being fueled by now the macro data and then amplified by the argument that stock valuations, not just tech but overall, are stretched beyond what many consider sustainable. which is really funny because we've been talking about this for months. How long have I been saying they're stretched? Don't chase it. Relax. Be patient. Right? It's just that when the crowd chooses to focus on and accentuate the negatives, then suddenly everything looks negative. And so this is the case and was the villain. And yesterday, the villain of the day was the Fed. Now remember, current Fed rates are 3.75.4. That's hardly restrictive, but it was the expectation that the Fed was just going to keep cutting that drove the narrative in stocks higher. Yesterday morning, the focus in the morning was on the positives, right? It was on NVIDIA. That lit the fuse. And the whole market began to rally. But then once they started to dissect the NFP report, the tone shifted. Then came the hawkish Fed commentary. And then when the algos realized that those guaranteed rate cut parades may not be guaranteed, well, that's exactly the kind of thing that sends the traders and the machines running for the exits. And then a kicker, a circulating story featuring 𝐊𝐿𝐴𝐧𝐧𝐲, who's chief strategist at Interactive Brokers, warning about the collapse of Bitcoin and whether or not that break could set equity markets on fire. Recall, Bitcoin is now trading at 82,000. That's down from 120,000 only a month ago. That's a 36% decline. And that swift decline is what caused a number of negative reactions over the couple of weeks, right? Remember, you can never do just one thing. One action here causes ripple effects over there, and it begins to overwhelm. It causes the algos to hit the sell button and run for the exits in a, shoot first, ask questions later type of mentality. So his answer, unfortunately or not, was yes, he thinks that this collapse in Bitcoin is negative for the broad market. And here's the thing that you need to understand. Interactive Brokers is not your grandfather's brokerage, right? Their roots, their culture, their structure are deeply grounded in electronic and algorithmic trading. They were one of the very first firms to replace human market makers with fully automated, computer-driven quoting systems. Their core business, now like many of the others, is automated market making and the ultra-efficient execution, right? It's machines trading with machines, running mathematical models, scraping headlines, interpreting broken trend lines, and firing off orders at the speed of sound. When the machines find something negative, they pounce. When they find something positive, they pounce as well. Yesterday, it was, though, all about the negatives. The VIX, which is the fear index, naturally surged. Stocks sell off, fear rises. It's a simple concept. And yesterday, it surged by 11.5%, testing the October high of 28.99. Just FYI, that's not helpful because rising fear creates anxiety and that causes some investors to make emotional decisions. And so you get what you get. And stocks went lower yesterday. Of the 11 major S&P sectors, only consumer staples rose. They rose by 0.7%, and that makes perfect sense. Those are the names that you want to own when the mood gets anxious. They're boring, but they're things that you need. Think Walmart, Costco, Procter & Gamble, Pepsi, Coke, Colgate, Mondelez, etc. Oh, and the move also was aided by the blockbuster Walmart report that we got yesterday morning. They beat on their earnings, and they gave a very bullish forecast. The worst performer was expected. Tech down 3%. Industrials down 1.5%. Basic materials down 1.5%. Consumer discretionary down 1.5%. Energy and communications down 1.3%. Financials down 0.9%. Utilities down 0.5%. Healthcare down 0.6%. And real estate down 0.3%. Down the chain, we saw weakness across the board. Home builders were weak. Retailers, airlines, emerging markets, semis all got whacked, right? Semis were down 4%. That's tech, right? Disruptive tech down 4.5%. Defense down 2.5% on the idea that maybe there's going to be supposedly a deal to end the Russia-Ukraine war. We'll see about that. Exploration and production lost 2.5%. As expected, the contra trades did well. The dog up 0.8, PSQ up 2.5, the SH up 1.5, the SPSX, which is the 1111 short, up 1.8%, the VIXI up 6%. Bonds ended the day higher. The TLT rose 4%, 4/10. The TLH rose 3/10. The 10-year is now yielding 4.06. The 30 years yielding 4.7. Oil sold off, falling 0.8 yesterday, and now this morning it's lower again, down another 2% at or $1.20 at 57.50. The weakness is being credited to the potential end of the Russian war. It's also necessary to note that Trump announced that he's going to auction off drilling rights in the Gulf of America on March 11th, as well as expand West Coast and the Arctic offshore drilling. Think more supply, not waning demand. Oil remains in the trading band of 55.62.5. Gold trading down $35 this morning at $4,040. The move lower there, a direct result of the idea that the gold bugs that were betting on a rate cut, which sent gold higher, have found themselves now caught in confusion, and that's causing gold to go lower. A no rate cut narrative stops the rally in gold. Trendline support for gold now is down at 39.80. The S&P closed at 65.38, down 103 points. Now, after all this, the S&P is down 5.5% from its all-time high. The equal weight is now off 5.5% from its all-time high. I would not be surprised to see us end the day a bit lower, especially if those three indexes, the Dow, S&P, and NASDAQ, breach support and are not able to take it back as the day goes on. If we test and hold, then we might see the start of some stabilization. Remember, next week is a shortened holiday week. People will be away and volumes will be muted, so reactions can be amplified in either direction. So be careful not to make an emotional decision. Remember, reversals can happen very, very quickly. Call me at 561-931-0190 for no obligation portfolio review because it's about risk management. Let me help you assess the risk of your current portfolio versus the risk you think you have in that portfolio, because that's really the key. Okay, so what do we have for dinner today? We're having the Veal rolatini, right, with prosciutto, red onion, arugula, and fresh mozzarella. For this now, you need the thin sliced veal cutlets. You need a thin sliced prosciutto, sliced fresh mozzarella. You need arugula, red onion, butter, oil, salt, pepper, and some beef broth. You want to preheat the oven to 350 degrees so it's ready. You want to begin by seasoning your cutlets, right? Then take it, lay it flat on the cutting board, place a slice of prosciutto, a slice of the mozz, a slice of red onion, and some arugula, and then roll it up and pin it shut with a toothpick. Set it aside, repeat it until you're done. Now, place a dollop of butter and a splash of olive oil in a frying pan and turn the heat to high. When it's almost sizzling, you're going to add the rolled cutlets to the pan. You're going to just fry them quickly on all sides, right? Maybe takes you 3 to 5 minutes, whatever. You just want to brown them on all sides. Then you're going to take them and put them in a baking dish. You're going to add more butter to the saute pan along with a half a cup of beef broth, right? You can use dry white wine if you want. Otherwise, beef broth is fine. Let it come to a boil. Deglaze the bottom of the pan. And then add that to the baking dish so that the rolatini are just bathing in the juice. Don't cover them. Just bathe them. Now, cover it tight with tinfoil. Place it in the oven and cook it for 10 minutes. Take it out. Remove the tinfoil, place these on a serving platter, serve this like with an herb-seasoned rice, maybe a rice pilaf, and a mixed green salad dressed in just olive oil and fresh lemon juice. Make it simple, not difficult. This whole thing maybe takes you 35 minutes start to finish. In any event, it's a delicious, quick meal. The kids are going to love it. You're going to love it. It's simple, it's easy, and it's easy cleanup. Now, it's Friday here in Florida. It's a beautiful day outside. As you can see, the sky is blue. The sun is coming out, probably about 75 degrees today, and gorgeous. Until Monday, take good care.